Hello and good afternoon. I'm James Preston reporting to you live from 𝐊𝐶𝐞 Studios. It's lunchtime here in Sydney and you know what that means. It's time for the mid-market pulse. In this show, we'll take a look at the overall Australian share market performance by the midday trading session. We'll also explore the biggest winners and losers of the day before we turn our focus onto stocks that have grabbed headlines so far today in our final segment. So let's get stuck in. Australian shares are trading higher this afternoon, holding early gains supported by buying across tech, healthcare and the industrial space. The market sentiment was also lifted by firm cues from Wall Street, which ended higher in overnight trades, as investors cheered the US Fed's dovish remarks on the tapering of its monetary stimulus. The ASX 200 was trading higher by 21.3 points or 0.28% by lunch. Earlier today, the index opened a tad higher and gained as much as 0.3%. The market also witnessed stock-specific movements as some big players such as Mesoblast, Harvey Norman, Satia, Splitit, Resimac, IGO, Bubs Australia and others all released their earnings report this morning, and we'll go into more depth on those reports in just a moment. But let's first move to the sectoral front. 7 of the 11 sectors were trading in the green zone. The information technology sector was the best performer with a 1.4% gain, followed by healthcare, which rose by 1.2% around lunchtime. Among others, telecom, industrials, consumer staples and also consumer discretionary were trading higher. Meanwhile, the energy sector was the worst performer with a 1.5% loss owing to a fall in crude oil prices. The price of benchmark Brent crude oil rose to over 73 Aussie dollars per barrel in overnight trades after a weak run for the past couple of weeks. Global oil prices increased after a power hurricane ploughed through the Gulf of Mexico, forcing shutdowns of hundreds of offshore oil platforms. On the COVID-19 front, New South Wales reported 1,164 new locally acquired cases and 3 deaths on Tuesday, while 2/3 of the state's adult population has received at least a single dose of the vaccine. Meanwhile, lockdown has been extended for 2 weeks in Canberra after the capital region recorded 13 new locally acquired cases. Let's now turn our attention to the biggest gainers and losers into the mid-market session. Global biopharmaceutical firm Clinuvel Pharmaceuticals topped the gainers chart by rising 8.7% by lunchtime. Some of the other notable gainers were software company Appen, online retailer Kogan, healthcare firm Healius and tech firm WiseTech Global. On the losing side of the coin, biotech firm Mesoblast emerged as the top laggard with an 11.3% loss. Some of the other worst performers were technology company Nuix, professional services firm Worley, gold miner Regis Resources and miner St Barbara. On this note, let's now shift our focus to shares that have been grabbing headlines today. Shares of biotech researcher Mesoblast tumbled over 11% post its earnings announcement. The company's net loss widened to $98.8 million in the financial year of 2021 from a loss of $77.9 million in the prior year. Moreover, its sales revenue dropped by 77%. Shares of online bookmaker PointsBet Holdings were down 3% after it released its annual earnings report. The company's loss rose more than 4 times compared to the prior year, despite revenue more than doubling. For financial year 2021, the loss widened to 164.3 million Aussie dollars from 39.7 million Aussie dollars in the last fiscal, dented by the higher marketing expenditure. Revenue jumped 159%, supported by growth in its Australian and US businesses. Well, it's time now for a short break in the Mid-Market Pulse Show, but stay tuned with me on 𝐊𝐶𝐞 TV, as I'll be back with more trending updates in just a moment. Tune in to get the latest information.
Whether it's about market movements or the currency graph,
sectoral coverage or industry news,
we cover it all on our news segments.
Be on top of the latest news
with 𝐊𝐶𝐞 TV.
Hello and welcome back. I'm James Preston and it's great to have your company on 𝐊𝐶𝐞 TV. Let's continue with our market commentary on the Mid-Market Pulse Show. The share price of Westpac Banking Corporation dropped 0.5% after Australia's Big Four lender completed the sale of its lender mortgage insurance business. The bank had sold insurance business to Arch Capital Group and entered into a 10-year supply agreement with the company. In March this year, the bank had signed a deal for the sale of Westpac Lender's mortgage insurance to Arch. Buy now, pay later firm Split It Payments saw its shares rising over 2% after it reported robust earnings for the 6 months ending on June 30, 2021. The company's merchant sales volumes surged 94% while gross revenue rose 79.7%. Total merchants rose 167% to 2,800 and total shoppers were up 83% to 566,000. In a separate development, the company also had a change of CEO. The current CEO, Brad Patterson, has stepped down and John Harper has been appointed as Interim Chief Executive Officer with immediate effect. Moving on, and online retailer Satir has reported strong annual earnings and has also upgraded its guidance for the next fiscal. The company's gross revenue surged 333% year-on-year in financial year 2021, while sales revenue jumped by 304%. The company's active customers also soared by 285%. Travel business Webjet saw its shares rise by 0.7% after it released a positive trade update. The company claimed that it will be cash flow positive in the first half of the 2022 financial year as its post-COVID strategy is delivering results. As per the company release, its WebBeds B2B business has been profitable in July and August and is well on track to maintain that momentum into September. Australia's leading retailer, Harvey Norman, had their shares fall by over 2% despite delivering a solid annual earnings report. The profit after tax grew by 75.1%, the EBITDA rose 54.2% to 1.45 billion Aussie dollars. Mining and exploration outfit IGO have declared a record final dividend after reporting solid growth in their annual earnings. For the 2021 financial year, the profit after tax profit jumped to a record of 254%. Revenue rose by 3%, while EBITDA also climbed by 3%. Boosted by strong earnings, the company declared a fully franked final dividend of 10 cents a share. Let's move on now to shares of Bub Australia, which have slipped nearly 4% after the infant nutrition and dairy business reported disappointing annual earnings. It posted a loss before tax of 77.8 million Aussie dollars in the 2021 financial year, compared to a $16.1 million loss in financial year 2020, impacted by COVID-19 disruptions. The EBITDA loss nosedived to $73.1 million compared to $11.3 million in the previous year. The gross margin decreased to 7.3 million Aussie dollars, primarily due to a $12.6 million inventory write-off and the decision to sell excess bulk powder inventory at a loss in light of the COVID-19 pandemic. So a very busy morning and mid-market session and plenty to take in on the Mid-Market Pulse Show. Hope you enjoyed the program. Stay with us on 𝐊𝐶𝐞 TV for more trending business and finance news. I'm James Preston, signing off for now.